Caterpillar Incorporated, CAT, in Peoria, Illinois, manufactures and sells construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives worldwide. CAT shares have gained 15.6% in price over the past year and 13.3% year-to-date to close yesterday's trading session at $206.38. Furthermore, Wall Street analysts' $232.67 median price target indicates a potential 12.7% upside from the stock's last closing price. Also, a Bernstein analyst recently upgraded the stock to outperform from market perform and boosted his price target to $240. CAT shares climbed on the news. In addition, Deutsche Bank analyst Nicole DeBlaise raised her price target to $242 earlier this month. In its last reported quarter, the company outperformed analysts' expectations, bolstered by rebounding construction equipment demand and surging commodity prices. Higher end-user demand and CAT's fixed cost-cutting policies helped offset the operational headwinds and deliver solid bottom-line growth. Furthermore, the infrastructure bill recently signed into law by President Biden is expected to boost the company. CAT is well positioned to benefit from infrastructure spending in the U.S., said Cowen analyst Matt Elkott. He listed the stock as one of his best choices for 2022. Also, in October, J.P. Morgan analysts reiterated an overweight rating on the stock, with a price target of $248 per share, and called the construction equipment maker their top pick into 2022. Here is what could shape CAT's performance in the near term. CAT looks undervalued at its current price level. In terms of forward PE, CAT is currently trading at 20.59x, which is 7.8% lower than the 22.34x industry average. Also, its 0.77x forward non-GAAP PEG is 55% lower than the 1.71 industry average. And CAT's 14.19 trailing 12 months price/cash flow ratio is 10.2% lower than the industry average. Solid third quarter earnings report. CAT's total sales and revenues increased 25.5% year over year to $12.40 billion in its fiscal third quarter, ended September 30th. Its operating profit stood at $1.66 billion, up 68.9% from the same period last year. Its profit attributable to common shareholders grew 113.5% from its year-ago value to $1.43 billion. And CAT's adjusted EPS increased 75% year over year to $2.66, topping the consensus estimate by 20.9%. Profitable. CAT's 10.64% net income margin is 67% higher than the 6.37% industry average. Also, its 19.15% EBITDA margin is 42.8% higher than the industry average. Furthermore, CAT's 32.57% and 6.37% respective ROE and ROAR are 139.9% and 23.9% higher than the industry averages. Dividend Aristocrat. CAT has paid a dividend every year since the company was formed and has paid a quarterly dividend since 1933. The company has increased its annual dividends for 28 consecutive years and is recognized as a member of the S&P 500 Dividend Aristocrat Index. On December 8, CAT announced that a $1.11 per share quarterly dividend will be paid on February 18, 2022. CAT's dividend payouts have increased at a 9.3% CAGR over the past 3 years and a 6.8% CAGR over the past 5 years. Ratings reflect growth prospects. CAT has an overall B rating, which translates to buy in our rating system. Of 78 stocks in the industrial, machinery industry, CAT is ranked number 24. Bottom line. As one of the largest construction equipment manufacturers, CAT is expected to benefit significantly from the Biden administration's infrastructure spending plan. The company has delivered robust bottom-line growth in its most recent quarter. Moreover, analysts expect its EPS to grow 58.5% in the current quarter and grow 32.2% per annum over the next 5 years. Also, considering it's significantly higher than industry ROE, we think the stock could be an ideal investment heading into 2022. Thank you for watching this video, we appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire and we'll see you in the next one.